Chairman Managing Director, Bharat Forge, has joined us. Revenue in line with expectations, sir, in line with what the street was expecting. Can you throw some color on which regions contributed to the top line?
Well, right now we are seeing growth in North America, we are seeing growth in Europe, we are seeing growth in the Indian markets, and we are seeing growth in every sector. I mean, we are focusing in North America and Europe on the pass car sector, and there we are growing very well. We have had fairly large new order wins in this area. Our total new business secured is almost $120 million in different geographies. We are seeing a strong growth in the domestic market, in the industrial sector, and you know, that's what is making our outlook fairly positive. We see a fairly strong year going ahead.
Okay, strong year going ahead. Mr. Kalyani, good morning. You seem to be firing on all cylinders. Both domestic and export revenue growth was solid this time. Can you give us some guidance on what the revenue growth in FY18 could be versus the industry?
You know, I think it will be above industry. So we should see a double-digit growth going forward in FY18.
Okay, so double-digit growth in FY18. Sir, coming to your other expenses, that's gone up by nearly 17% this quarter. Could you tell us the key reason for that?
No, that's one-off because we had a wage agreement signed, so there is a one-off amount that is the arrears of from July till now of the wage differences, that's all.
You know, we have been sort of tracking the North America truck orders for a while, and there's quite a bit of traction seen lately over there. Sales in April went all the way up to 23,600. But tell me, when do you think the run rate could improve to those older levels of around 30,000 plus or so?
I don't know whether, you know, I won't give you a number, but all I can say is we see traction increasing in the North American market. We're also seeing that in Europe. So we see our revenue going up quarter by quarter moving forward.
Okay, Mr. Kalyani, domestic demand was not up to speed in the first 2 months of this quarter. Can you tell us the outlook for FY18? Any bounce back that you can smell?
Yeah, I mean, you know, that's pretty much known because of the conversion of BS3 to BS4. There is an overhang in the market as far as CVs are concerned. So it was expected that Q1 will be a very subdued market in the CV. So it's pretty much known. It's no surprise that it is subdued. I think Q2 will be a little less subdued, and H2 should be much better, much stronger.
Okay, so one final question. If you could give us an update on the business that you get from railways as well as aerospace. Currently very small, just about 2% of your revenues, but can we expect a pickup there?
Oh yes, it'll increase. You know, we, even last time I have said, if you look at the aerospace business, our target is to reach somewhere close to 45-50 million by 2020. And that's on exports. And I think we will have a similar or larger number in the domestic market on aerospace. So we are seeing a lot of traction in that area. A lot of work is being done. It's a market that takes a long time to develop and get into. But the flip side of that is once you get a contract, the contracts also run for a very long time. So, you know, we are slowly and steadily making fairly good progress in aerospace, both with customers like Rolls-Royce, Boeing, Liebherr in the export market, and of course domestically with HAL, being the only producer of aircrafts and flying machines.
Thank you.